The one mental shift that made Warren Buffett rich. What if I told you that Warren Buffett didn't become one of the richest people in history because he found better stocks, but because he learned to think differently than almost everyone else? Most people believe wealth comes from working harder, making more money, or finding the next big investment. Buffett's greatest advantage wasn't any of those. It was a single mental shift. And once you understand it, you'll never look at money the same way again. Let's dive in. Imagine two people walking into the same grocery store. One buys whatever catches their eye. The other patiently waits for discounts and only buys when the value is obvious. The first spends based on emotion. The second spends based on value. That's exactly how Warren Buffett approaches investing. Here's what most people completely miss. The stock market isn't just a place to buy shares. It's a daily test of human psychology. Prices move because people become greedy, fearful, impatient, or overly excited. Buffett understood something extraordinary. Price and value are rarely the same thing. That's the mental shift that changed everything. He stopped asking, "How much can this stock make me?" Instead, he asked, "What is this business truly worth?" That simple question separated him from millions of investors chasing headlines and hype. Think about 2008. While fear spread across global markets and investors rushed to sell, Buffett remained calm. He knew that panic often creates opportunity. Great businesses don't suddenly become bad businesses just because people are afraid. That's the power of emotional discipline. Behavioral finance teaches us that humans naturally avoid pain more than they seek gains. We panic during downturns and become overconfident during booms. Buffett built his fortune by doing the opposite of what emotions demanded. But here's where it gets even more interesting. This mindset extends far beyond investing. Imagine buying a house because everyone else is buying, choosing a career because it's popular, starting a business because it's trending. Those decisions are driven by social pressure, not value. Buffett trained himself to ignore the noise and think independently. That's why he famously said, "Be fearful when others are greedy, and greedy when others are fearful." Notice he wasn't talking only about money. He was talking about mastering your own mind. The real investment isn't your portfolio. It's your ability to stay rational when everyone else is emotional. And that's incredibly difficult. Social media rewards instant gratification. Markets reward patience. Friends celebrate quick wins. Buffett built wealth by playing a completely different game, one measured in decades, not days. Almost nobody realizes that becoming wealthy is less about predicting the future and more about controlling your reactions to it. So here's a simple challenge for this week. Before making any financial decision, pause and ask yourself one question. Am I buying because something is valuable or because everyone else is excited? That one question could save you thousands of dollars and completely change how you build wealth over time. Because the biggest investment advantage isn't higher intelligence, it's a calmer mind. If this episode gave you a new perspective on investing psychology, subscribe for more insights into the hidden mental habits behind financial success. Like this video, share it with someone who's serious about building lasting wealth, and I'll see you in the next episode.